KCI was at the distressed real estate panel discussion in downtown DC. One of the more interesting assessments given by the panel was from Serge Laircy of j.e.robert, who told onlookers about 4 focus areas in the coming year that may signal an end to the real estate market recession.
The first is that in the S&L crisis, commercial real estate was really the epicenter of the macroeconomic problems. There had been a tremendous boost to new construction, partially because of quirks of the tax code in the 1980s. And as a result, when the cycle turned, there was enormous excess capacity in local space markets. Today, the situation is different on that front. Construction was generally in line with trend demand, but the macro economy now, it seems different in that commercial real estate is more, as a sector, is more collateral damage than the center of the problem. We've had, obviously, the demise of the investment banking model in this country and a global collapse in industrial production. The second difference is one that's been talked about by actually each of the previous speakers, which is the enormous bid-ask spread. Private buyers are not willing at this point to pay the price that financial institutions are looking for in trying to realize on their commercial mortgage assets. Financial institutions won't sell generally below the price that they have assets marked in their books, and that's because they're afraid that if they do so, it'll become apparent to regulators as well as investors that these institutions are technically insolvent. As a result, you've had a dramatic decline in transaction volume between apartment properties, office properties, industrial properties, and retail properties. Transaction volume in the fourth quarter of 2008 was down by over 90% relative to peak transaction volume. The third key difference that I wanted to talk about is the number of financial institutions that have failed in this crisis versus the S&L crisis. Between 1988 and 1992, over 1,600 institutions were closed. So far in this crisis, only 57 have closed since the 1st of January in 2008. The result of that is that there have been dramatically fewer large commercial real estate portfolios hitting the market, and those portfolios were very useful in the last cycle to set pricing. The fourth difference that I want to talk about is that in the last cycle, eventually government strategy for dealing with the problems in commercial real estate became clear. The approach was to use the Resolution Trust Company to close down failed financial institutions. Currently, the approach that the government has to ending the crisis is much less defined. Let me briefly discuss 2 government programs to demonstrate why it is I say that the current government approach the effectiveness is still in doubt.